this is Andy here. Andy with GarciaResearch.net. Just taking a look at the markets. Want to take a look at the dollar dashboard that I commonly like to look at. This is one of my favorite tools, or should I say, my favorite ways of looking at the market. Easiest to take a look at the dollar pairs and then trade accordingly. It's just a simplified way of looking at the currency markets. So let me show you exactly what's going on here. On the top left, you have the dollar index. This is the dollar, and then you have the positively correlated markets with the dollar. So you have the this is the Swiss franc, this is the Canadian, and then this is the Japanese yen. On the opposite side, these are all the markets that I look for to go the opposite direction. So here's your euro, here's your pound, Aussie, and then the Kiwi. Okay, so Zealand is the smallest market, if you will, but the way that I like to focus on is to look at the dollar index first. This is the first place that I kind of look at, and then what I'll do is after this I'll go this way, because when I look at the other positively correlated currencies, it gives me an idea as to whether or not the move or whatever I'm seeing in the dollar, it confirms or invalidates what I'm looking at in the dollar, right? All right, so from there, then I'll go to here, and then I'll go this way, because then I want to see if the other pairs are doing the opposite. And sometimes you'll have what is happening in the dollar, you'll have it confirmed by what's happening in the euro. So that's another thing to pay attention to. Sometimes I'll go from here to here if I'm really only caring about what's happening in the euro. But suffice it to say that the most important thing to be looking at is the dollar, and that's where we will always focus our attention, or at least see what is happening first there, and then we'll start to navigate the other markets, sometimes going down, sometimes going across. But again, the impact here is the important thing for me to do is to pay attention to what's happening in the dollar. So let's take a quick look here now. When I read a chart, this is also something important to pay attention to, is you always start from the furthest to the right here, okay? So you always start at the very first bar and you move your way back. And in this particular situation, this past week has been really very, very quiet. Okay, as you can see, all of this activity right here has really just been nothing but a quiet movement. But when you compare that to what has happened, I guess, let's see, if I compare that to what has happened over the past couple of weeks, let's go and look at all this stuff. You can see that we try to break out here, and the market really hasn't had any kind of follow through. So with that in mind, you know how holiday seasons are. They have a tendency to invalidate a lot of moves, or you just don't really get any follow through, and that's what we're seeing right here. So that's pretty much why I have been really quiet lately. You don't want to be active during the holidays, but the most important thing here is to see that you had this breakout here, and then the idea would have been to wait for a retest of the back of the trend line, which you got here, and afterwards you should have gotten a move to the upside if we were not in a holiday season. So what does that mean for us going forward? Well, at the very least, that has to bring into play this Fibonacci level right here. This is acting as a level of support. My analysis is showing that, as long as you could stay above this low here, that you should be setting in a higher low and therefore putting in a move to the upside. Again, you have the basis here is that you had this long-term trend down. The market broke out here, and then you came down and retested the backside of the trend line here, which was coincided by a 50% retracement of this move here. And therefore, what we can be looking for, as long as we stay above here, this is where stops are. Okay, there's a higher the percentage of completion, or should we say the probability of success grows the longer that we can stay above this level here. So as long as the dollar can stay above this level here, then the likelihood increases that we'll make our move up to here. See, this is something like this is what I'm expecting. Okay, so in all likelihood, if you're entering the market at this point, then you definitely want to be, this is, I would even say that there could be this 60% retracement, which is beneath this this market. Let's just bring that up real quick, which isn't too far off. So, if I extend this trend line, and that would suggest that we would come down to the trend line at the 60% retracement level and then get our bounce, right? If this is a complete fake out, that this move up is not going to draw in any buyers, then there is the possibility that we could come down to this level here. But like I said, the most important thing to pay attention to is that we're in a buying zone down here. And as long as we can stay above this low here at 11,748, this is the dollar index, not the dollar index futures, but this is the dollar index. So as long as we can stay above these levels, then the likelihood of moving towards 250 and such way up here looks like this is going to be in the likelihood would be increasing. So what I'll do is let me just clone this just in case we actually hit this 61% retracement level. If we were to hit the 61% retracement level, then I'm calling a projected move to looks like 12,229 versus 12,261. So this area, this zone over here, is really going to be a target that I'm looking for the dollar to hit at some point coming into the new year. The expectation here is that we hold above this level. We hold above this level, and we come down and work our way up here in an ABCD pattern. So if this is your A, this would be your B, this would be your C, and then the target would be over here. We're not sure how long it would take, but as you can see, one of the things that you can pay attention to is the length of time that it took for this market to transpire. So this is September, October, November. This is about 2 months here, and therefore this should probably be about the time frame or whatever. But again, that's kind of what I'm looking at in the dollar, and as long as that continues to hold, then that's what I'm playing for. So one of the things that we should look at is for confirmation. Let's go take a look at the board here. You can see that the Swiss franc, the Swissy, is one of those pairs that you can look at that has a tendency to mimic the dollar. In other words, it will do pretty much exactly the same thing as the dollar index futures, or the dollar index for that matter. And you can see the same kind of breakout here. You had a breakout of this trend line, and then the market came down and retested the trend line. Then it broke out again after bouncing at a 50% retracement level, And let's go ahead and add the 61.8 just to be safe, because this gives us an idea about where the market could go if it's not going to rally off of this level. Remember, the most important thing here is that we need to stay above this 94.22 area in the Swiss franc. So this low down here is our complete washout. And this area right here, this 97.32, 96.58 area is a buying zone. This is where you need to be looking to enter the market all the way down here. Okay, that's not what I wanted to see. Let's go try another color. Guess we're going to have to do white. Okay, so that right there is your buying zone with a stop loss. Let me get another here. The stop loss is down here, and then the target is going to be somewhere up here. I'm just doing this by eyeball right now, but you can see here this will be the A, B, then you have your push down to C, and then you have your D leg. But again, this is the same kind of pattern that I'm looking at in the dollar index. So keep an eye on the Swiss franc for confirmation. So that is a positively correlated market. And then looking at the Canadian dollar. The Canadian dollar, which is kind of showing the opposite for now, ran into a little bit of resistance. You have a 50% Fibonacci level based on this high to this low. So if you were to go and use your Fibonacci tools and measure this line here, we are bouncing at the 50% retracement level. Okay, the market is holding right there, but it keeps bouncing between these two fib levels, and I wouldn't be surprised if the market comes down at least a little bit. And you can see here's a previous low, which could be your left shoulder, and then you have over here, which could be your right shoulder before actually moving up, right? So all of us who are familiar with the head and shoulders, you have the left shoulder, head, right shoulder, and then this is your neckline, and it's go time. So we have a buying zone around 124, which coincides with this previous low. And then you also have these minor lows right here, which would coincide as well. So we should not be overly excited about getting long the Canadian dollar yet. Now just be patient here and wait for these markets to come to you, because they're going to set up nicely. When they do, you're at 124 on the buying opportunity here, and then that pushes you all the way up to like 136, assuming that this market can hold above that low. If you were to, let's see, take a measured move from here to here, that's about 800 pips. I would even say 700 for that matter. So from 124, that's taking you up to about 132. That would be my projection, is a target up here at 132. Okay, and you can also see that we have these Fibonacci levels to work our way through, so just be on alert there. 124 is buying zone in the Canadian, and then you have the Japanese yen, which is kind of interesting here. It looks like it wants to break out at some point, and it looks like it's getting squeezed between a couple of different levels. What I'm looking at this very moment, we're running up against resistance. So you would argue that on a short-term basis, talking about the next week or so, that this market could actually work its way down off of this trend line, assuming that this trend line continues to hold. But it looks like at some point that this market should break up, considering the dollar index and what we expect for the dollar. Okay, so if the dollar, the euro, or if the dollar and the Swiss franc and the Canadian dollar, I'm expecting to move up, then the chances are that this Japanese yen should probably move up as well. And just to confirm that, you have this move here from this low to this high. If you measure this, this is your current trend, right? Let's assume this is your up move. Well, any kind of a retracement right here is just a retracement. You have the 50% retracement level, you have the 61.8 level. These are buying zones. This is where you want to be actually executing, taking action with an expectation that the market can move up here into the 116 to 117 area. And your stop loss, although it's a little bit far down there, I would argue about 300 pips. If you buy it at the 61.8% retracement level, you have 110.15 or 111 at the very least. You're looking at a 300 to 400 pip risk here. But if you if the level holds, then you're looking at about 600 pips. Okay, so 5 to 600 pips on the upside. So it's a really a pretty decent risk to reward. I think I would take this all day every day. Okay, again, the expectation is that as long as the market can hold above this low here, as long as it can stay above this low, then an entry at these levels needs to be taken. And the likelihood of success increases the longer it stays above A, to target up here at D. There's the Japanese yen. And then again with the euro. So the euro, assuming that what we saw in the dollar is what we can expect, that the dollar has put in a low and that it should continue to go higher, that would automatically suggest that the euro should go lower. For how long, we don't know, or we can speculate that on that all day. But one of the things that I'm paying attention to is this initial thrust off of this high here on the euro, right? You have this move down, which has been more pervasive than any of these moves. If you look at this move, any of these down moves, these corrective moves in the euro, this move is a lot more in terms of percentage and time. Okay, so we've been in a retracement here, and it looks like this is all nothing but consolidation, but can also be looking at a distribution, right? So we've gone up for the whole entire year. This is 2017, right? So you can look here at 2017, and the market has literally gone up all the way until about late September or something like that. Okay, so it's been consolidating sideways since then, and at some point you can imagine that there's going to be some sort of retracement. That is the expectation, that in order for us to get up to the 130s, which is a possibility, this market looks like it's going to want to retrace first. But so what I'm looking at here is this move here, and this is a deep retracement of the initial move down, which right now, if we stay above, or if we stay below this 78.6, and I'm looking for this market to work its way down to like the 1272 type area, or somewhere just beneath the 115 area. Who knows how long it's going to take, because this market is really not overly active as we go into the holiday season. As you can see, over the past week, the market really isn't doing anything, but it broke this recent downtrend line that I have. So what I have to do is readjust this. Now that this trend line, this down channel is invalidated, what I'll do is I'll go and start to look at applying an uptrend line, because we have a higher low essentially. Okay, so this right here is my new uptrend, and the expectation is that this should fail. But that, we'll see what the market decides to do. All right, so this right here is a tentative type of channel that I'm watching. Let's see if I connect this. Yeah, that seems a little bit more. That to me is what I would say is your current channel, you can see here that we connected these two highs here. So at the very least, we have some validation there. All right, based off of this low here, and of course this this cluster low. But be on alert here that you are in an upward move, and it wouldn't surprise me if this market actually goes and takes out the highs. It has a tendency to do that. You know, you could see this market come up here, and then we can start to establish a head and shoulders type of pattern still. There's plenty to do here that, you know, this market looks like it wants to fight going downward. So at the very least right now, the expectation is to see if this market will work its way up into these zones and then fail. That's kind of my expectation for the euro. Going to look at the pound. Now the pound is showing a little bit more weakness, but we still have this trend line that we need to break. Okay, so this trend line right here is very important. It's going back to April, and the market still has not has not violated this trend line. But you have a prolonged retracement here, where you had this move off of the high, and then you had this thrust back up to the 78.6, and the market is holding the 78.6. So again, the longer that we stay below this level over here, the higher the likelihood is that we actually push down and start to work our way back down towards, it looks like 129 to 128 area. But you can see these levels starting to come into play. So in all, this is what I'm doing, is I'm looking for these levels to get short. Watching these you know, thrusts back to the upside. You have this downward channel coming in. And so any kind of rally up into the upper part of this zone needs to be shorted. Or at least you pay attention to your lower time frames to look for selling signals. And then you have the Australian dollar, and the Australian dollar is doing kind of the opposite. So this is this could be the canary in the coal mine, which is telling me that the down move may not come in the euro and the pound if this market is not cooperating. I need to see this market fail here. So this is again a daily chart. What you need to pay attention to is this low to the high, and then this low to the high. When you take a look at those on the Fibonacci basis, you can see that the 61.8 and the 78.6 cluster have been coming into play, and those markets or this market is being held right now by these levels. So what does that mean going forward? It means that the longer that this market can stay above this level here, then the higher the likelihood is that we'll start to see this market work its way up to 81, right? You got this most recent high over here. So looking for this market to drift lower, make a higher low, and then start to work its way up, assuming that we continue to stay above these lows here. Okay, so you have an interesting turn of events here. You have a low, and then you have a lower low, and then you have a break above the recent high here. Okay, so this right here, it needs to come and make a higher low. It's going to retrace, make a higher low, and this is going to be your buying zone. This will be the place to enter and get long the Australian dollar. Will be in this zone, and then looking for this market to at least come back up to the 77 even area, and then potentially up to the 81 zone. You can see this target right here is going back to this high. So this market is setting up where it looks like it's going to be moving back to the upside, and if it does, then that's kind of interesting. It's going to set up for it could invalidate what we're looking at in the dollar. This is the New Zealand dollar, and what I'm paying attention to here is this previous low. The market came down to this low, and it has bounced off of this low. Market continues to stay, the New Zealand dollar continues to stay above this, And on top of that, you can see here that we've broken above this most recent area of support. You have this accumulation zone. The market came down, bounced up, came down, tried to take out the low, got faked out. This is a bear trap here, and then rallied, and then came and held this most recent level. You can see this head and shoulders reversal, and now the market is pushing higher. So at the very least for right now, the market is holding above these recent lows. And on a short-term basis, in terms of like over the past week, notice here that we're just bouncing between some key Fibonacci levels. The Fibonacci levels that I'm measuring here go back to this high to this low, and then I measured this high to this low, and you can see that we're bouncing at the 23% on one fib tool, and then the 382 on the other. So it looks like we're just in between these zones right now. But again, let's reiterate what I'm talking about, that as long as we can stay above this low here, as long as we can stay above this low, then the market has a higher likelihood of pushing up to these higher Fibonacci clusters. So these are all target areas. You're looking at as high as 72 and change. But what we can expect going into the next week, for instance, is the market to come down and then try to shake out the traders. And then this area down here is your buying zone. Similar to what you were looking at in the Australian dollar, we're going to be looking for this market to have a brief sell-off coming down into these levels, probably at this recent high that it broke out of, right? Got this area, and then to shoot upward. So that is what I'll be looking for in the New Zealand dollar. And as long as things continue to remain the same, it looks like the Kiwi and the Australian dollar are they're trying to buck the trend, if you will. That the market is kind of doing the opposite of what the other ones should do, and that's kind of interesting. That with the dollar, it looks like the rest of the pairs are in line, but the Australian and the Kiwi are actually not cooperating. So I just wanted to give you a little heads up as to what I'm looking at going into the new year, and hopefully this will be helpful in your trading. Hopefully that you are definitely making some killer moves out there, enjoying these holidays and spending time with your family as much as I have been. That's definitely been a priority at this point. So just wanted to give you an update, and we'll see you at the next update. Good luck in your trading. Talk to you soon.